nvidia just posted earnings and it was, by any standard, absolutely exquisite. Flawless, you might even say. Olympian. Revenue was up sharply year over year. Margins were hovering near levels most semiconductor companies never approached. The stock moved about 2%. Apparently, the judges were not impressed. The disconnect between those two things, the marvelous success that they reported on earnings and the 2% stock move, that disconnect is the story. NVIDIA earnings are no longer about NVIDIA. They're about something bigger than that. They're now the closest thing that the markets have to a quarterly stress test of the artificial intelligence economy. If you want to know whether AI investment is accelerating or plateauing, you don't need a think piece. You need NVIDIA's income statement. So let's talk about the NVIDIA indicator. NVIDIA controls the overwhelming majority of advancing AI accelerator supply. Somewhere between 80 to 90% of the high-end market. Wouldn't split hairs. Let's just say the majority. 90% of its own revenue now comes from data centers. So that's not gaming chips. That is the literal foundational infrastructure of AI. Microsoft runs Copilot when OpenAI trains its next GPT. When you ask Grok to build you an AI girlfriend, NVIDIA hardware wakes up somewhere in the world to answer your call, which makes NVIDIA functionally the toll booth on the highway of AI growth. Every ambitious infrastructure bet that's made in Silicon Valley eventually passes through its balance sheet. It's the receipts of the entire industry. The numbers were once again borderline absurd. Quarterly revenue surpassed expectations at a scale that not long ago would have been considered strong annual performance. NVIDIA now passes what Coca-Cola makes in a single year in 3 months. And this is not driven by consumers upgrading their graphic cards. Nearly all of it is data center revenue. Governments and tech giants are writing very big checks to build AI infrastructure. Margins also remain unusually high. English translation, NVIDIA isn't just selling a lot of chips, selling them at prices that suggest customers don't really have alternatives. For most companies, this would sound like their best quarter ever. For NVIDIA, it's starting to sound like a regular checkup. That might be the most unusual part of all of this. So now to the paradox. If performance was so strong, why did the stock barely budge? Investors already assume that AI spending is massive. That's everywhere. They assume that NVIDIA will capture most of the market share. That expectation is priced in. The bar is, did they prove that the spending wave is still accelerating? When the hyperscalers like Google, Amazon, Meta, Microsoft are now spending $700 billion on AI infrastructure this year, is roughly the GDP of Switzerland. Question shifts from, is this sector strong to, is this sector sustainable? Is this a new industrial era, or are we aggressively front-loading capital and the other shoe is about to drop right on the data center? NVIDIA scale, strong growth isn't enough. It has to signal that the cycle is expanding. A 2% move suggests that the market has just nodded and acknowledged that the machine is running. Perfection is now the baseline. There were some cracks in the walls that the analysts will be watching in future quarters. NVIDIA was famously in talks with OpenAI on a $100 billion deal. Has now gotten a 70% haircut to $30 billion. Analysts are also noting that NVIDIA is exposed to companies with fragile balance sheets. So cloud giants are spending at historic rates, but nobody can actually point to the revenue that it justifies. That is the billion-dollar question. Will AI monetization catch up to AI investment? Then there's the weird kind of incestuous circularity. NVIDIA is investing in Anthropic, it's investing in OpenAI, in the same companies that's buying its chips. Everyone's hand is in everyone else's balance sheet. Asked about it on the call, Jensen Huang, my man, said it's about ecosystem. Nice buzzword, but does raise a question. Are these customers or contingencies? The CFO also issued a warning about China. NVIDIA's dominance in China has effectively evaporated. Export controls were supposed to slow China's AI development down. Instead, it actually created a protected market for competitors to catch up. So now this whole parallel AI chips market, very fun. Finally, analysts are watching the shift from training to inference as the AI market matures. Training requires NVIDIA's GPUs because they're the best. It's teaching the model, so cost be damned. Inference is just running the model billions of times a day, and for that, good enough and cheaper starts to win. So here's the uncomfortable but honest takeaway. NVIDIA is now the collection agent for the AI trade. As long as the checks clear, the story holds. But if capital discipline returns before AI profits do, Jensen will be the guy to feel it first.